So, here's a bit of a riddle for you. What could possibly connect gold bars, giant nuclear power plants, and the bill you get at the grocery store? It sounds kind of random, I know, but the answer actually connects those huge global headlines right back to your daily life. We're going to show you how they're all caught in the ripple effect of major world events.
All right, so to really get a handle on this whole ripple effect thing, there's one big idea we have to get on board with first. In our modern world, this feeling of geopolitical uncertainty, it's not a temporary bug. It's basically the new operating system.
You know, you think about military conflicts, huge financial meltdowns, these major events, let's call them geopolitical shocks. They don't just happen in a vacuum over there. They send these massive ripples out across the entire global system, and those ripples touch markets, government policies, and economies absolutely everywhere.
Okay, so a crisis hits. Bam! Where does that first ripple even begin? Well, it starts with the most basic human instinct in finance, people immediately trying to protect their money.
And that instinct kicks off this huge phenomenon that we call the flight to safety. It's exactly what it sounds like. Capital, we're talking big money, just floods out of things that seem risky and pours into what are known as safe havens.
Now, when you think of safe havens, two classics probably come to mind. You've got gold, right? The one people have trusted for literally thousands of years because, well, you can hold it in your hand. And then you have the Swiss franc, a currency that's basically the financial equivalent of a calm, neutral country that just wants to stay out of trouble.
And if you're wondering why people do this, well, this chart tells the whole story. Just look at these numbers. During some of the biggest market crashes you can think of, the S&P 500, the broad stock market, it just got hammered. But gold, it actually went up. It's like a financial life raft in the middle of a storm.
But here's the thing, it's not like you can just pick any safe haven and call it a day. They are not all the same. The US dollar, for example, its performance is kinda all over the place. The Swiss franc, on the other hand, man, that thing is remarkably consistent. And then you've got Bitcoin, the new kid on the block. It is wildly volatile. It can crash in one crisis and then soar in the next. It's a real wild card.
Okay, so we've seen the first ripple, that immediate flight to safety. But that's just the start. Let's follow that wave as it gets bigger and starts to wash over the entire stock market.
So as that fear starts to spread and people start whispering the R word, recession, something really interesting happens. We see what's called a great sector rotation. And that's just a fancy way of saying there's a huge, almost coordinated shift in where the smart money is going. Basically, investors start pulling their money out of what we call cyclical stocks. Think about it. Airlines, luxury brands, fancy restaurants, all the stuff you buy when you're feeling good about the economy. And where does that money go? It goes into defensive stocks. These are the companies that provide the absolute necessities. We're talking food, electricity, medicine, the things you have to buy no matter how bad the economy gets. And that's the connection to your grocery bill. The companies stocking those shelves are classic defensive plays.
And this isn't just a theory, we can actually watch this happen in real time. There are funds that track these two different types of companies. And by just looking at the ratio between them, how the defensive stocks are doing compared to the cyclical ones, we get a really clear indicator of investor fear. When that ratio goes up, you know fear is taking over the market.
So, this ripple is getting pretty big now, right? It's moved from individual assets to the whole market. But it doesn't stop there. The next wave hits entire nations, forcing them to rethink some of their most basic fundamental strategies, especially how they keep the lights on. For governments, it's this constant, incredibly difficult balancing act. It's called the energy trilemma. They're trying to juggle three balls at once, keeping energy secure, keeping it affordable for you and me, and trying to keep it environmentally friendly. It is not easy.
And then a geopolitical shock hits, something like the war in Ukraine, which throws a huge wrench in the global fuel supply. And all of a sudden, one of those balls in the trilemma becomes way more important than the others: energy security. Suddenly, just having a reliable source of power at home becomes a top-tier national security issue.
So, in that hunt for a stable, homegrown source of power, a lot of countries are looking back at an old friend, nuclear energy. And why? Because it's a super powerful way to make electricity that isn't held hostage by what's happening in volatile international markets.
Okay, now get ready for this, because this is where it gets really mind-blowing. Let's talk about the sheer scale of fuel we're talking about for traditional power.
Look at this number, 3 million tons.
That's how much coal you need to run just one large power plant for a single year. I mean, just try to imagine the logistics of that.
Okay, you got that massive number in your head. 3 million tons. Now, look at this.
30 tons. That's how much uranium fuel you need to produce the exact same amount of energy. It's almost unbelievable, right? This incredible energy density is an absolute game changer for energy security. It means a country can easily stockpile years' worth of fuel, basically creating this huge strategic safety net against any future supply shocks.
All right, so we followed these ripples all the way from an investor's gut decision to the stock market, all the way to a nation's power grid. So what in the world does all of this mean for you?
Well, here are the big things to remember. First, these huge geopolitical shocks, they're not a glitch, they're a permanent feature of our world. Second, things like gold and the Swiss franc can act as a shield, but nothing is foolproof. Third, you'll see the market's mood shift from let's grow to let's just get the necessities. And finally, energy security becomes king, which is why you're hearing so much about things like nuclear power. The bottom line is, understanding these connections gives you a kind of toolkit, a way to make sense of a really uncertain world.
And all of this really leaves us with one final big question to chew on. In a world that is this tightly woven together, maybe the biggest risk isn't the crisis itself. Maybe the real danger is in failing to see all the invisible threads that connect it all, right back to us.